made. Jan Dhan Yojana is here to stay, but the heart of the matter is 42% of the account are dormant or have zero balance. So how do you make these accounts active and make financial inclusion viable? That's a talking point. Joining me on the show is Mr. Arun Tiwari, Chairman and Managing Director of Union Bank of India. Mr. Tiwari, welcome to the show. Mr. Tiwari, if I begin by asking you, 3 years back when financial inclusion was talked about, everybody thought it as a compulsion, as a cost, as an extension of CSR activity, but not as a business opportunity. Has that perception changed among bankers?
If you look back, when we talk about financial inclusion, 1969 nationalization was a step towards financial inclusion. Priority sector landing as a step towards financial inclusion. Yeah. But this time around when it was done, last August, it was done in a mission mode where it was like a carpet bombing. Every household was covered. And if you look at the numbers, 18 plus crore number of accounts, about 24,000 crores of deposit lying in them, close to 9 crores Bima Yojana accounts, Jeevan Jyoti about 3 crore account. I think that says it all. It has made a huge difference, and I think the world has recognized that we have gone beyond the politics of poor. Okay. And I'm sure in the times to come, which I feel is not too far, it would be really a game changer in the millions of lives across India.
How are banks coping with the 18 crore additional account that has come into your fold? Is it putting strain on your infrastructure and stress on your staff? Plus, I also understand there's a lot of duplication of accounts.
Look, to be very honest, this kind of exercise would have not been successful to the extent it has been had we not had rock solid IT infrastructure. And I'm not talking about just Union Bank of India. By and large, a public sector bank had these things in place. Give an example. When we opened Jeevan Suraksha or Jeevan Jyoti accounts of insurance, if you come to the branch and you tell me your account number or your name, I would be able to give you your insurance policy within 16 seconds flat. That kind of backup work we had done. Everything is in my system. It was just to be populated with your name and account number. So if we do our homework well with the infrastructure in place, I think it's going to make a great difference for us going forward and to the customer both.
Okay, I want to get your 43% of the accounts are dormant. So how do you make these accounts active? How do you ensure that these account holders are also using it for credit, using it to buy a deposit or raise money, all those things? How do you activate this account? Number one. And I also understand that it's no more a vanilla account. The government is routing DBT, Narega all through this account. So what needs to be done for entire banking system to make these accounts active?
Look, when you said about 43%, the correct number is about 41% accounts are zero balance or inactive accounts. Look, let me give you a number. Globally, even in the developed economies, 65% of the account holders at the best use their account once or twice in a year. So we are not too far, number one. And in the period of July, June and August this year, this number has come down substantially by 15% to 41% of zero balance account. Yes, there would be an element of double accounts of a person. So the duplication exercise we have undertaking already, and going forward, I think once these are weighed out, one, and two, when entire government benefits are put into these accounts, this would be, I think, beyond words of anybody or apprehension of any word, the kind of changes it will bring in the lives of millions of people across India.
Okay, I want to get a comment here once again. Is financial inclusion responsibility only of the public sector bank? Because as I understand, out of the 18 crore bank account that has been opened under Jan Dhan Yojana scheme, 14 crore are by PSU bank, 3 crore are by RRBs, and only 71 lakhs are by private sector bank. So, are you telling me there is no money at the bottom of the pyramid?
Talking about public sector banks, one of the purposes of being government banks, we have to serve the larger purpose for a greater benefit of the society. We have been doing that job for a long time. Private sector banks, look, it's a symbiosis, coexistence, collaboration. Whatever IT we have, let me put that on record, we have not been that ahead in the IT platform in public sector banks? Perhaps, if it was not triggered by the private sector banks. So perhaps we have validated the model of financial inclusions.
But what about financial literacy? Is there a concerted efforts towards making financial inclusion happen to financial literacy? My question is, who will take the call? Should the government do financial literacy and educate these people that they need to bank? You know, the saving rate was 35-36%, now it has come down to 30%. So if you scale it up, you can see more people coming into your fold. So should the bank come to and do financial literacy? Then that will help you a lot?
Yes, having opened the account, it's not the end of it, it's just the beginning. So first thing would be financial literacy and uses of these accounts. Otherwise, what for these accounts are? So literacy would be quite important, and once people get literate, they would have that trust in the system. And then they will start getting to that habit of coming back time and again to the financial institutions and banks. But tell me one thing, why this much talk about financial inclusion is left on the doorstep of government and banks? What about you and me? What about the society's role? Where is the society? I would put it this way.
But our country is always supposed to be, somebody has to lead actually.
Okay, the lead has already been taken. Now, do we pay our driver salary by cash or put it to his account? Do we pay our maid in cash or put it to her account? Have we ever talked to our people who work around us in the private sector, in the personal capacity, to tell them about the benefits of putting their money in the bank and the other attendant benefits after that? Perhaps we have failed there. So, if we have to take care of the 360 degree or the entire ecosystem of the financial inclusion, even public has to play its part, the society has to play its part.
Everybody has got a role to play. On that note, we take a short break. We'll be back again. Welcome back. I'm with Mr. Arun Tiwari, CMD of Union Bank of India, and we are talking about financial inclusion. Mr. Tiwari, do you see Jan Dhan Yojana bringing about a societal change?
If you ask me honestly, Jan Dhan Yojana has for sure set up a benchmark for the sheer audacity of aim, hope, achievement. And for sure it has put to rest one thing, that cynicism whether poor is bankable or not.
That's right.
I'm too happy as a banker and as an Indian passport holder, the way we have rolled it out and the way it has impacted the lives across the country, from farthest corners in Orissa or northeast or Jammu and Kashmir or down south, everywhere.
Do you see the women particularly being empowered because of Jan Dhan Yojana?
Look, to begin with, our goal was, in as much as when we were covering households, we should cover the women from each house.
True.
And history says it, that women have been a great saver, a great provider back home, and their farsightedness in financial matters has been proven over many centuries for now.
Yeah.
So, coming back to your appointed question, if I look at not only including the accounts under financial inclusion, Jan Dhan Yojana, when it comes to lending, the most of it has happened by way of giving loan to SSGs and JLGs, which are predominantly being run by the women.
Okay, now let me turn to your bank, Union Bank of India. How many Jan Dhan accounts you have opened in the last 1 year, since August 20, 2014?
Would you believe the target was to begin with 30 lakhs, which was enhanced to 40 lakhs. In exactly 1 year time, we have opened about 56 lakhs accounts.
So how was this made possible?
Again, the way it was done, mission mode, all the agencies, whether it's the government or we or different arms within the bank, they were in sync, one. And two, the mapping, the way it was done, all the SSAs were mapped to a bank. I mean, I knew which is my geography. So the moment I know this is my geography, which I have to cover, we covered just house to house, everything, and about 99% households are covered.
So if I were to ask you, how many lives have been transformed by Union Bank of India by this drive? Okay,
if you talk about how many lives, we have added about 58 lakhs Jan Dhan account. It doesn't end there. About 30-35,000 accounts we have given the loan. Next step, we never talked about in our country about the social security. So when PMJJY and the Suraksha Bima Yojana came in. In JJY, we have opened about 12 lakh account, whereas in the Suraksha Bima Yojana, about 28 lakhs account. It doesn't end there. Now talk about the Mudra Yojana, Pradhan Mantri Mudra Yojana. We have already added about 80,000 accounts in that. So I think all in all, it's the way it was rolled out this time in the mission mode, where all the agencies, whether the government agencies or the banks or within the banks, they were in absolute sync, and therefore there's sheer audacious results which even globally it's acclaimed. And let me share with you, Union Bank of India has been ranked first by Government of India Ministry of Finance for highest coverage of all the SSS.
Last year when we met in Banaras, your bank had transformed lives of people who are making saris, or the fishermen and the local people there. Now here we are in Kerala. How has Union Bank transformed lives of people here? And which sector are you looking at? Are you looking at koi, or looking at rubber, or fishermen? What is it?
Kerala, the God's own country.
Yeah.
We have got large presence here, though we are a Mumbai-based bank, but as I said, we have got pan-India presence. We have got about 240 branches in the state of Kerala. And let me share with you, two of the districts, one Ernakulam where we are, other the Idukki. These are our lead districts. And what gives me absolute sense of pride is, Ernakulam was the first district which was declared pan-India meaningful financial inclusion 100%. I wish I could have taken to our RCT here, where former Governor Reserve Bank of India, Dr. Rao came, Dr. Subbarao came, and the kind of florid tributes they have given to our RCT is one of the best. It's being adjudged AAA or AA for the last 4 or 5 years in a row. So that comes, we don't end with just opening the account. We take it to the logical end. And talking about which all kinds of segments, you talk about koi, you talk about fisheries, you talk about rubber, just about everything and anything we have been covering here.
So Mr. Tiwari, going forward, what is your plan for Kerala?
Look, the plan we have for Bharat or India, we have planned for Kerala as well. Incidentally, Ernakulam,
okay,
our first RCT was set up here in 2004. Way back in 2004.
Much
and this is one of those RCTs which has been getting a lot of laurels for us from Ministry of Rural Development. Would you believe, when people, entrepreneurs we call in the RCTs to give them vocational training, our settlement rate is we get them engaged in a meaningful manner to live their life happily and in a satisfactory. It's been 80%. It's one of the highest in the country. So that in a way says it all, that how intrinsically, how wholeheartedly we are involved with the people of Kerala.
On that optimistic note, we need to take a short commercial break. We'll be back. Stay right there. Welcome back. I'm talking to Mr. Arun Tiwari, Chairman and Managing Director of Union Bank of India. Mr. Tiwari, are you seeing any pickup in investment cycles?
Look, when the economy has not been doing good for so long, the cycle takes a bit to trigger. In as much as India is concerned, we should look at the larger context. Look at the recent IMF forecast. For India, it's still 7.3%, whereas globally, if you look at, they have been moved it downward by 20 basis points from their July forecast. And look, there have been many reasons for it, the downside of the economy. One, political turmoil, as you know, the commodity prices. But in context of India, the investment was to be triggered from government side, which they have started. I mean, 2/3 of the investment they have already done for the current financial year. And once that is done, I'm sure even the private sector bank will come on board for the investment cycle. From macro perspective, if you look, whether it's twin benefit deficits, fiscal and current, or the leveled inflation rate, or the reserve position, just about everything. We are at that sweet spot.
Scenario is just right, you're saying.
Yeah, we are at that sweet spot at the point of inflection when we have to take just that leap of faith and leap of action.
Okay, if I were to be more specific, when you look at your own bank's book, are you seeing your client going for capex or setting up new projects?
To be honest, it's not happening. You know, when we talk about my bank or banking sector in general, the core sector has got stuck for a long time for many external reasons. None of these industries are bad. When I talk about core sector, whether it's steel or it's power or it's roads, But government's persistent efforts over last 1 year, they are definitely in the right direction, and which that it's not just the hope, the firm belief even of the corporates I see going forward, maybe 2 quarters from now, things would be back to normal. Investment, what you talked about, first thing, those brownfield projects, which are or the stuck projects, they will be on the roll, the working capital cycle will trigger, and then will come the greenfield projects.
But if I were to look at year-to-year comparison, the advances have declined to 9.6% FY15 compared to 14.5% in FY14. So do you see this picking up, the advances?
No, when you say advances, now the borrowing part, part of it has moved. In recent past, you would have seen that the corporates, they have gone to alternate sources. Whether you talk about the working capital, the CP markets, and or the bond markets, or overseas borrowing, just to have that interest rate benefit. So all in all, if you ask me my balance sheet, we have been growing quarter after quarter, but within that, what the growth driver is, retail, agri and MSME. We have been clocking for last 6 quarters or so about 25% growth in these 3 segments, and of that I have got a great benefit. One, my risk weights are less, client base is more, return is better, so just it suits me, and that is where from the demand has been coming.
The corporate generally has been talking about interest rates. The RBI this year has reduced repo rate by 120 basis points. But the criticism is the banking sector has not passed on the transmission. The transmission has not happened. So your comment on that?
Let's be clear about 2 things. Reserve Bank has reduced their repo rate by 125 basis points. But you know, the repo rate is the rate at which I borrow from Reserve Bank of India. When liquidity is surplus, there is no occasion for me to go to Reserve Bank of India and borrow that money. Number one. Passing on, when these repo rate has gone up in the past, but bank base rate had not gone up in the same proportion. So they will decelerate also in the same proportion. Number 3, if we talk about base rate cut, it impacts my loan book immediately from tomorrow morning. I need to have, because I have to manage my balance sheet also. So over the last few months, all the banks put together, they have been reducing their deposit rates. But it has got that lag effect. For me, about 80-85% of my resources come from the deposit, term deposit. Of that, about 27-28% comes for repricing every quarter. So I will have that, I can reduce on that differential part or marginal part of it. So the best bet would be, we should be allowed, the banker should be allowed that base rate, if we have reduced, it should be effective on a particular account of a corporate or otherwise from interest reset date. So we will have that cushion going forward. Or you make both sides of the balance sheet floating. Deposit also floating rate, but that's not possible.
Not possible. On NPAs, I think this NPA level seems rising year after year. In 2013 it was 1,75,000 crore. Now it has jumped to 2,67,000 crore. If we also look at other things embedded in the economy, the whole NPA, gross NPA could be in the region of 14%. So as a banker, are you worried, and what are you doing to tackle it?
Trust me on this, I'm not a worried chairman. Because if I look at my stressed portfolio, 58%, 59% is the coming out from the projects which have got stuck for one reason or other, and they all are from the core sector. And when we talk about 7.3% growth or thereabouts, it can't happen without coal, power, steel, cement, roads, and that is where I'm stuck. And none of these projects per se are bad. It's the cash flow issue, and cash flow issue, you know, some of them, they had gone into the expansion at a time which coincided with the downturn of the economy, so they got caught. So I'm sure as the economy moves up, these all will be back on track, and the better part of it would be that whatever provisions I have made in these accounts, I'll be unlocking them. And we should not forget, when we talk about in our perspective about the stress portfolio, it includes restructured portfolio also. Now, one thing which is to be clarified and cleared at the back of everybody's mind, this 525 or SDR, they are global practices which we have come on board now. Look, when I funded a project 5 years back or 7 years back or 8 years back, it was, the project life was say 25 years. We funded it for 15 years. So what we did, we tried to squeeze the cash flow within 15 years. It was not really possible. It was perhaps our calculated mistake with the ALM problem. Now that has been normalized as per the global practices. So I'm sure in the times to come with this 525, JLF, corrective action plans, SGRs, everything will fall in place over a period of time, and that time is not too distant.
Finally, looking at your bank's book and looking at the local and the global signals, what kind of forecast would you make for India over the next 24 months?
If you ask me, we are moving in the right direction at the right pace. Look at the fundamentals. Whether you talk about the inflation, you talk about the current account deficit, which was a great worry, of fiscal deficit about a year and a half back. You look at the forex position, just about everything. We are at a very comfortable level. So even when we say the US Fed will do this trigger will these things, we are not that much, we will not be that much impacted. And if you look at the macro numbers, I think they all are quite optimistic. And my take is in next 24 months or so, our economy should touch about 8%.
On that optimistic note, thank you very much for being with us. Thanks a lot for being on CNBC TV 18.
Pleasure.
Focus, ideate, innovate, enable.